All right, hi everybody. Today we're talking about Pepsi stock. Pepsi is a company that trades under the ticker symbol PEP on the NASDAQ. And this is a multi-billion-dollar international company that has dozens of different drink products. We're also talking about their Frito-Lay brand. They actually make Frito-Lay chips and Quaker oatmeal. A lot of people don't know that. But they also have drinks like Aquafina under their brand name. They have a lot of different drinks. They have Gatorade, for example. A lot of people don't know Gatorade is under the Pepsi brand. So they have a lot of different drinks. Just an example of some of the drinks they make and some of the products they make. A lot of people don't know what kind of drinks they make. So they have dozens of different drinks. And then they have new drinks coming out as well. So they have this new drink called Driftwell that actually just came out. And so Driftwell is a sleep aid that's going to be available in the first quarter of 2021. And so, like I said, it's a drink that helps you sleep. And I will leave the link in the description to this article on Driftwell if you want to learn about it and how it can benefit you. So Pepsi stock, this is the share price right here, $131.47. If we look back at the chart since the year 2000, for instance, we can see that Pepsi was trading at about $40 per share. And since that time period, you figure the stock price has doubled roughly every 10 years because it's trading at $131. So not bad, but we also have to factor in the dividend, and that's the main thing. So Pepsi is a Dividend Aristocrat stock, and what that means is that they've been able to increase their dividend every single year for at least 25 years. And so Pepsi has increased their dividend every single year since 1973. So for 47 years, you've seen an annual dividend increase, at least one dividend increase every single year since 1973. And we can go over to the dividend history, and we can see that currently Pepsi pays $1.02 per share. And they actually raised the dividend in February from 95 cents per share. So that's about a 7% increase in their dividend, which far outpaces the inflation rate, which is right around 2%. So you're getting about 5% real growth there in the dividend. But we can go back to, let's say, 2010. Let's scroll back to 2010, and I'll show you that Pepsi was paying a 45-cent dividend at the beginning of 2010. And then they jumped it up to 48 cents. So in the last 10 years, you're going from 45 cents in dividends on a quarterly basis, and then that dividend's going up to $1.02 per share now. So that is over 100% growth in the dividend in the last 10 years. And we can go back to the year 2000, for instance, and we can see that Pepsi was paying a 13.5-cent dividend. And then they raised that dividend to 14 cents per share. So going from 14 cents to over $1 per share, $1.02 per share. I don't know what that percentage-wise is off the top of my head, but that is a significant amount of dividend increases on a percentage basis, several 100%. And so that far exceeds the inflation rate. And a lot of people just look at the dividend yield when choosing to invest in stocks. But that's not the most important thing to look at. The most important thing to look at is the amount of dividends that they're paying, and is that dividend going up over time. And currently, Pepsi does pay a pretty good dividend yield, about 3%, 3.07%, and that's a pretty good dividend yield. But a lot of investors make the mistake of just focusing on the yield, and the truth is, the amount of dividends you're getting and are those dividends going up over time, that's more important. That's much more important than just chasing a high yield dividend stock and hoping that the dividend goes up. That is not investing. That's gambling if you're buying a stock without really considering anything else but the dividend yield. But a 3% dividend yield is pretty good. I mean, if you invest $1 million into Pepsi today, then you're going to get $30,000 in income from that investment. I know most people don't have $1 million. I don't have $1 million, but you get the point, right? And that dividend, like I said, will most likely keep going up over time. So that's one of the main reasons to buy Pepsi if you're interested in getting solid dividend growth that will most likely increase over time. And the thing about Pepsi stock, and I actually mentioned this in my previous video on the 5 best Dividend Aristocrat stocks, and Pepsi was first on the list. And I'll leave that info card up there right now, and you can click on that if you want to watch that video. But basically what I was explaining is that when you ask a lot of younger people, and you can ask people who maybe you're young yourself or you have some grandchildren or you have some children and you're asking yourself, okay, well, what do they want to drink, right? Ask around and you'll probably find out that they like Pepsi. A lot of the younger generation drinks Pepsi products. And not just the Pepsi drink itself, but also a lot of the drinks they make, like Gatorade and things of that nature. You can ask them if they prefer Powerade or Gatorade. And I think a lot of them will say Gatorade. And a lot of them will also say Pepsi, because I think Coca Cola is more for the older generation. And of course, that's not 100% true, but we also have to factor that into their future growth. Because the two main competitors, when you think of soft drinks, when you think of Gatorade versus Powerade, Coca-Cola makes Powerade, by the way. So just something to keep in mind, because in the future, I think the millennial generation and all of the people who are drinking Pepsi now, and that'll probably continue with young people younger than me, for example. I'm 24, going to be 25 here in a few days. That's going to really impact their sales in the future as the younger generation shifts away from Coca-Cola, right? The older generation starts to die off. I hate to say it, but as the younger generation gets older, they have kids and that their kids start drinking more Pepsi products. That's definitely going to have an impact on their sales. And also, the fact is, Pepsi is expanding into different markets. They're expanding into the multi-billion-dollar sleep market. So they're taking more market share. They're going to keep on taking market share because they keep on coming up with innovative products. And those products are high-quality products that are going to be around and consumed for a long time to come. Because once people get hooked on a specific product, they typically like to keep buying that product. It's just, once people go with Pepsi, they typically stick with Pepsi. If people go with Coke, they're going to stick with Coke. And I'm not saying Coke's a bad company, but I do think Pepsi stands to gain more market share with the younger generation, like I said. And that's just something to keep in mind as an investor, because that will impact their future sales and their ability to increase their dividend in the future. Now, Pepsi currently has a dividend payout ratio of 79%, and this is according to finviz.com. It's a website I really like to use to analyze companies. You can go there and you can really look at their numbers and for any type of company you want to invest in. So it's a great website. But anyway, the dividend payout ratio is 79%, and I did mention this in my previous video, but 79% is not bad, okay? It's not horrible. You don't want to see a dividend payout ratio of over 100% typically. But if you can find a company that has a dividend payout ratio of 50 or 60%, 70% is still pretty good. But in that range, as long as they have some margin to reinvest back in the business and things of that nature. Because what the dividend payout ratio is, it's basically the earnings per share divided by the dividends per share. So how much in earnings do they have versus how much of those earnings are they paying out in dividends? And then how much do they have left over after they pay out all of those dividends? So in this case, Pepsi has 21% of their net income left over to do whatever they want with. They can put that money in the bank. They can reinvest that money into the business, whatever they want to do. But basically, on a simplified level, that is what the dividend payout ratio entails. And so you never want to see a dividend payout ratio over 100%. Sometimes that can happen if sales have fallen sharply, if their net income is way down. That can happen to a company. But typically a strong company will have a dividend payout ratio of 50, 60, 70%, around that range. So just something to keep in mind. That's typically what I look for when I invest in companies. Now, if we dig deeper into the financial data, we can see that Pepsi has total revenue as of the end of 2019 of $67 billion, up from $64 billion in 2018 and $63 billion in 2017. They have a gross profit that has gone up, which is $37 billion, up from $35 billion in 2018 and $34 billion in 2017. Now, if we look at their operating income, we can see that they have $10.2 billion versus $10.1 billion in 2018, and it was actually $10.2 billion in 2017. But if we scroll down to net income, their net income is $7.3 billion. They had a pretty good year in 2018 at $12.5 billion, but then in 2017 their net income was just $4.8 billion. But basically, their net income remains relatively stable. And the thing about Pepsi stock you have to keep in mind, and Pepsi as a company, is that their net income will most likely remain stable for years and decades to come. Because even in recessions, people are still buying Pepsi products. Sure, I mean, they might only buy one case instead of two, and some people will stop buying things like Pepsi to cut it out of their budget. But keeping that in mind, Pepsi's a relatively stable company, especially when you think about all the different products that they have in their product line. As I mentioned, they have Frito-Lay chips, they have Quaker oatmeal, they have Gatorade, they have Aquafina water, for example. Lots of people consume these products and they keep on consuming them regardless of what happens to the economy. They're still going to buy Pepsi. You know, you think about all the drinks in gas stations, for example, the fountain drinks and all the Pepsi products that are consumed on a daily basis that are, you know, there's always going to be demand for Pepsi is the point I'm trying to make. So this stock or this company holds up pretty well in a recession. And so we can look at the net income, and even in a recession, you're still going to see some pretty solid numbers. And this is based upon 2019 numbers that they made $7.3 billion. So we'll have to see what the 2020 numbers will be. But I would expect that their numbers will still be pretty stable, especially considering the fact they already increased their dividend. So they have the ability to do that, and they're going to have the ability to do that for a long time to come, in my opinion, unless there's a fundamental shift in their business. That's the only way I see Pepsi not being able to increase their dividend. If they do something horribly wrong, maybe they get some bad CEO, some bad manager in there who just messes up the entire business. Kind of like what happened to General Electric, if you remember that, when they had the new CEO come in. It's possible, but unless there's a radical shift in their business model, I really don't see anything bad happening to Pepsi. And I only see their revenues and their income going up over the long run just because it's such a household name. And there's always going to be people who drink Pepsi products. And that's just something to keep in mind if you're an investor is, do you drink Pepsi products? Do you drink them without even realizing them, right? Maybe they're under a different brand name or whatever, like Aquafina or Gatorade. You didn't even realize you were drinking Pepsi products. But that's something to keep in mind. If you're a consumer and you're still drinking Pepsi products in a recession, then most likely other people are as well. Now, we can go into the balance sheet real quick. And if we do that, we'll see that the balance sheet has some pretty good numbers as well. They have total assets of $78 billion, and they have total liabilities of $63 billion. So you always want to see that they have more assets than liabilities. But if we dig deeper into the financials, we can see that they have $5.5 billion in cash and cash equivalents as of the end of 2019. And then if we look at their long-term debt, they had $33 billion in long-term debt in 2017, and then they had $28 billion. Now they have $29 billion in 2019, or at the end of 2019. So their debt is down from a couple years ago, which is good. Long-term debt is being paid off or remaining relatively stable. So, I mean, they're, like I said, you know, they don't really have much more in interest expense. They don't have much more in terms of their debt. So that's really good. They have a strong balance sheet. I mean, $5 billion in cash is pretty good. But a lot of that's being paid out in dividends. A lot of the cash that comes in is being paid out. But, you know, we could keep looking at the financials and we could keep confusing ourselves with all the numbers and, you know, what looks good and what doesn't look good. It is important to look at the financials just to make sure they have, you know, a good balance sheet and that their debt's not going crazy or anything like that, or that their income statement doesn't look horrible or they're losing money or whatever. But speaking from just looking at the business overall and thinking of all their different product lines, they're going to be in business for a long time to come. And I would expect that dividend to keep going up over time. So just looking at the big picture, that's what I see with Pepsi stock. And that's why I think Pepsi is a good buy. I really do think Pepsi can make a good addition to your portfolio. If you're looking for a dividend stock that will keep on increasing that dividend, and also you're going to get some decent share price performance. I mean, you're not going to get a huge return on Pepsi stock. You're not going to see the share price go up 1,000% overnight or anything like that, like a lot of these electric vehicle stocks that's happening right now. You see Tesla and all these other stocks that are shooting up rapidly in value. You're not going to see anything like that with Pepsi stock, but you will see slow and steady growth in the share price, most likely, and you also will see an increasing dividend. And, you know, like I said, a 7% increase this year alone is pretty amazing. And the year's not over yet. So maybe in the fourth quarter, they'll pay an increased dividend as well. So just something to keep in mind. But anyway, guys, I hope you enjoyed this video on Pepsi stock. And let me know if you're buying Pepsi, what you're doing for your portfolio, or if you already own Pepsi. I'd love to hear your thoughts. And until next time, guys, thanks so much for watching. Be sure to hit that subscribe button if you're new to the channel to stay up to date with all the different topics related to making money, investing money, and things of that nature. And until next time, I'm Drew Stegman, and I'll see you in the next video.